Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day video. It is the first trading day in a new month, October 1st. That's right, already in October, just a few months left in the year. We are into the fourth quarter of 2024. I'm sure it'll go by pretty quick. We're going to take a look at one out of the luxury brand category, consumer discretionary one here. LVMH, which is Louis Vuitton, Moet, Hennessy. They actually list it Moet, Hennessy, Louis Vuitton, but here they list it Louis Vuitton, Moet, Hennessy. So that's the brand we're going to look at, or a merger of some pretty big iconic brands actually. But before we get into the video too far, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. Make sure you are subscribed to the channel. Join us on this journey to financial freedom. Are you a dividend growth investor? That's what we focus on here. Make sure you're subscribed. Click that notification bell so you're notified whenever we put out any new content. I do the stock pick of the day videos Monday through Thursday whenever the market's open, where we take a look at a stock that's pulled back on the day to see if it's presenting any value. I also do subscriber and viewer requests as well. So if you have a company like Moet, Hennessy, Louis Vuitton you'd like me to cover in the stock pick of the day series, go ahead and drop it down below and I'll work it into the rotation. Special thank you to the subscribers out there. You guys are awesome. Really do appreciate it. The channel continues to grow because of people like you. Now, this is the vested interest stock screener. This is the criteria we're going to be running through in the video. It's also how I look at stocks on a high level to see if I'm interested in adding them to my watch list. Now, it must meet 5 of 8, or if it was a financial company, which it is not, it must meet 6 of 9. Now, we throw in price to book for financial companies like banks and insurance companies. Using 1 as fair value, anything under 1, undervalued, anything over 1, overvalued. Now, for companies outside the financial sector, you can use price to book. Just make sure you're comparing that company to other companies in the same space and see what their price to book is. And then, 2, 3 companies you want to compare, at least 2, if not 3 or 4. And that'll give you a range of where the price to book is. You can also look at price to book for the company you're looking at and compare it to its history, right? The previous year, the previous 3 years, the previous 4 years, previous 3 or 4 quarters, and that will tell you where it's at currently. If it has a higher price to book than it has over the last 3 or 4 quarters or over the last 3 or 4 years, then it's probably a little overvalued compared to itself. So that's just a quick way to use price to book. Again, just don't blindly use the one. And you can tweak this list, add to it, take away, make it your own. We're all different type of investors, different ages, different retirement goals, different retirement timelines. So tweak it to your liking, adjust it how you see fit. This is my criteria. It doesn't necessarily have to be your criteria, but it is how we're going to run through the videos. So let's get back to it. Now you can check this company out at their homepage, www.lvmh.com. That's www.lvmh.com. That is their homepage where I pulled this from. As you can see here, right, the picture of Louis Vuitton bags. Maybe if your wife or girlfriend or sister, mom, maybe you may have bought some of these over time. I don't think I have. I know my wife has a few of them that she bought before. Well, I think she bought a couple before we were together, and she's bought 1 or 2 since. Here's a tag watch, right? So that's under their umbrella. Travel, if you didn't know, they do travel and leisure. Obviously, higher end travel and leisure, I'll say. Hennessy, right? There's the iconic brand Hennessy that you're probably very familiar with. LVMH was created in 1987 through the merger of Moet, Hennessy, right there it is, and Louis Vuitton, right there's the bag, ushering in a new era for luxury industry. With 75 Masons in key sectors of the luxury industry, wines and spirits, that'd be over here, fashion and leather goods, right, that's down here, fragrance and cosmetics, I didn't pull any examples of that, watches and jewelry, there's an example, selective retailing and other activities, that's the travel, as well as some other retail out there, right? So I actually did not know that they had luxury travel sites, and as you can see, I believe this one is in India, maybe it's not. Let me know in the comment section below if you know where this is at, but it looks pretty. I know my wife would like to go on a vacation like that where we're out in one of these little huts out on the water. I don't know if I'd be getting in the water. It's pretty clear water. It looks nice anyway. But again, check them out at www.lvmh. They're a luxury products supplier, travel supplier. That's really their bread and butter. Now, the reason we are taking a look at them, down 4.16% on the day. We are talking about Moet, Hennessy, Louis Vuitton, right? That merger. Ticker LVMUY. So the ticker is not LVMH. Let me repeat. The ticker is LVMUY, right? LVMUY. Last time. Close out the day at $147.57. 52-week range as low as $131.16, as high as $191.63. They are within 15% of their 52-week low. You can buy them under 150. That is within 15% of a 52-week low. So currently, they are right in that wheelhouse. They have a market cap of $377.006 billion, a beta of 0.96, so they are just slightly less volatile than the overall market. Price to earnings ratio is a little elevated, in my opinion, though I don't know enough about the company to know, what does its growth rates look like? Is it justified for that? I mean, are there a lot of people buying luxury goods, taking luxury vacations, buying luxury watches and handbags? Maybe there's enough people buying alcoholic beverages. I don't really see that as a luxury item, but I guess Hennessy is probably top shelf or higher on the shelf than some of the other lower brands, but that's neither here nor there. What you drink is up to you. PE rate, and most people won't cut out drinking before they cut out some other things, right? That's just the way it is. Same thing with smoking. Most people will continue to smoke if they're going to. It's one of those things. If you have a bad habit, sometimes it's hard to kick. So sometimes having stocks and spaces of bad habits is a good way to make money. I do not buy cigarette brands. My dad is on oxygen, and I just won't support that. That's a personal choice, and maybe you're the same way. Maybe you don't want to support people that are drinking, and maybe this brand's a turnoff to you. That's completely up to you. How you invest is your personal decision. This company here, as far as drinking, wouldn't necessarily bug me, but like I said, smoking would, so I understand where some of you may be coming from. EPS, earnings per share, $6.24 per share. Earnings date, it was July 23rd, so you could go read their earnings report if you wanted to get more information about what that looks like and what their maybe future projections look like. Forward dividend is $2.79. That is, I believe they are a semi-annual payer. They only pay once or twice a year. Check me on that if I'm wrong, but we'll see that here later in the video, their payouts over the last at least few years. Dividend yield is a little low on this one, 1.82%. Ex-dividend date, April 19th. Again, already well past that. They did pay out on May 5th. So you would be in line for the next dividend, though you may have to wait a little while. Again, we'll see what their payout schedule is here later in the video. And according to Yahoo Finance, they have a target of $145.11, which would be some downside from where it currently sits, right? It needs to continue to drop. So they feel like this one might be a little overvalued right now, at least according to Yahoo Finance, where I pulled this information from. Jumping over to the right, we're going to look at the dividend yield theory to see if this one is potentially undervalued based on dividend yield theory. To do that, we look at their 5-year average, 1.39%, compared it to the current 1.82%, or over here where it says forward annual dividend yield, 1.82%, same number. Since it is higher than their 5-year average, that speaks to potential undervaluation, at least according to dividend yield theory. Payout ratio is low, 46.15%. I like under 75%, so they beat that metric there by a long shot. Again, anything under 75%, in my opinion, is relatively safe. You start getting up to 75% and above, unless it's a BDC, business development company, or a REIT that typically, I think REITs are required to pay 90%, and business development companies typically pay higher dividend yields, just the nature of the company. So we went over the dividend date, next dividend date there. So we're going to drop down to free cash flow. We want growing free cash flow over time, because typically if a company has growing free cash flow, they also will grow their dividends. I also should mention this is a foreign company, so there might be some tax implications. I believe this one is out of France, so make sure you understand that as well. 2021 here, you can see $15.3 billion in free cash flow. 2022 dipped down to 12.7. 2023 further dipped down to 10.5. Looks like the trailing 12 months actually are primarily just 2023 numbers repeated. So they do not have growing free cash flow. The repurchase of capital shares I like to see, but it does not account for those drops. 556 million in repurchase shares in 2021, 2022 1.6, 2023 down to 1.5. So that's where maybe the 21 to 22 number accounts for that, but you can see a decrease in free cash flow as well as a decrease in the repurchase of shares at 1.5 billion here in 2023. So that's why I'm saying this 2023 is definitely a drop in free cash flow from 2022. We'll have to wait and see what 2024 numbers shake out. Now, unfortunately, stockanalysis.com did not have a lot of forecasted projections on this one, and I'm assuming that's the nature of it being a foreign company. So we did not have a forecast with any analyst recommendations. We'll have to use the one from Yahoo Finance. If you have some other analysts that maybe have looked at this from another site outside of stockanalysis.com, go ahead and drop it down below. Let me know what the projections look like. I do count on you guys from time to time to keep me honest and make sure that I'm putting out good information. So let's help each other out in the comment section down below. Now, they did have return on equity and return on invested capital. I like 10% or better for both these metrics. Return on equity sitting at 23.21%, beats the 10% I'm looking for there. And return on invested capital at 13.33%, beats the 10% I'm looking for there. They did not have EPS forecast either. So again, limited on the forecasts on this one here. Now, jumping over to their dividend history, as you can see here, they are a semi-annual payer. I think I said maybe annual payer. So semi-annual payer. Looks like they're paying twice a year. Looks like it's July, December, May, December, May, December, May, December. So May, December. So they should have another payout in December if they maintain this semi-annual payout. Payout ratio low, 46.53%. Dividend growth, nice single-digit, high dividend growth, 7.95%. You can see here 2019, 35 cents and some fractions of a penny, 44 cents in 2020. In July 2020, November, which paid out in December, would have been 35 cents. 75 cents again in May. December was 51 cents. So you can see a nice steady 119. So that would be, so if you look at it this way, right, the December payments goes from 35 and fractions of a penny, 35 fractions of a penny. December payout up to 51, then again December up to 83, and then December up to 94, right? So compare the December numbers and then do the same thing with the July numbers. 44 up to, well, May or July, up to 75 cents, then again in May 119, then May 125, then 130. So that's how you can see the growth. I know it looks like it goes up and down, but compare the same months or, you know, similar months. May and July are pretty close. December, it always looks like it always pays out in December. So compare those months' payouts, and that's how you'll get to the dividend growth of 7.95%. All right, let's wrap this one up. Go back to the vested interest stock screener here. Understand the business. That's where we started. Check there. Again, check them out at their website if you want to know more about them. Growing free cash flow. No, they had, looks like definitely a down year from 2022 to 2023. Growing dividend. It is growing over time. Dividend payout ratio 75% or less. It is under 75, so check there. Dividend yield theory says it's potentially undervalued, so check there. It is within 15% of a 52-week low, so check there. Return on invested capital, return on equity, both over 10%, check there. It did not have the 5% earnings per share growth. Technically, it didn't list it, so I can't really tell you one way or the other. But even missing some information, we're looking at 1, 2, 3, 4, 5, 6 out of 8. This definitely will go on my watch list. I may do a discounted cash flow analysis on this one, see where it sits. But it is an interesting company. Again, I did not realize how much they were really into. The travel one really was a shocker to me. I mean, I knew about the Louis Vuitton and the handbags and the retail, the luxury retail stuff, not really about the Hennessy. I didn't realize they had merged with Hennessy, especially that far back. But apparently they do have a lot of different brands underneath their umbrella. So you might want to do a little bit more research to understand everything that they do offer. Well, let me know what you think of Louis Vuitton, Hennessy, Moet Hennessy. Is it in your portfolio? Is it one you're watching? Is it one maybe you're selling? Maybe you're concerned with the big downturn. Should we be concerned with the downturn? Let me know what you think in the comment section down below. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Hit that subscribe button. Don't just hang out in the back. I know a lot of you are watching the videos and haven't done that yet. Go ahead and join us here. Help me grow the channel. I need your help to do that, and I count on you guys for those things. Drop a comment down below. Let me know what you think of the video. Let me know what you think of this stock here. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. Again, I do viewer and subscriber requests, so go ahead and drop them down below as well. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.